Ladies and gentlemen of the crypto space, we're live on a Friday, February 16th at 11:45 a.m. Title of the stream is The Master Chain. So, as with every stream, it's a journey of thoughts trying to present something coherent. The first thing that came to mind this morning was Gary Gensler on MSNBC and just general interactions that they had in that conversation. But it's something that is the case for everything we hear out of political commentary or opinion of basically all politicians, or the vast majority of politicians. And what Gary said was that why would someone base an investment based on the type of ledger, the accounting ledger? That was basically more or less what he was trying to express. And it's short-sighted, and it's not about the accounting ledger necessarily. That's like proof of stake versus proof of work, and how like finality is achieved, and something that's argued about a great deal on social media. The consensus rules, the transactions per second, time to finality, data availability, block size, and it's literally why Celestia's hot, and why many downstream chains are hot. We're all arguing over which ledger has different attributes and characteristics that are better or more interesting or more useful or potentially more productive. But as with everything I do, I go to the highest level. I zoom out as best possible. That's not the most important thing. That's what Gary's argument didn't consider, and that's what most politicians don't consider. It's not about the ledger necessarily or the attributes of the ledger necessarily. It's that it's not a U.S. market. If you transfer capital into a crypto asset, onto a crypto chain, onto a blockchain, you are expatriating capital. You are sending capital offshore. You are an international investor. You are investing in international assets outside of whatever country you live in that you're physically in. That's the point that they don't understand, they can't digest, and that's why all regulators, how do we regulate stablecoins? Regulate stablecoins in which country? Which jurisdiction? Because all of this is international. And they could argue awkwardly where you deployed from means it's from a particular country or where the developers are. No, those are attack vectors. But the chain itself, if you have validators that are located across the planet, if you have nodes across the planet, as with Bitcoin, yes, you could attack miners. Those are attack vectors. But if they, it's not a chain of a particular country. Oh my God, it's crazy. It really is the perspective that regulators or it's not regulators, it's old people. It's literally old people that cannot expand the vision of what they're inspecting beyond the scope of what they could control. Like, how do I bring it into the fold? The fold of what? The fold of what I could control, what I could regulate, the system, the financial system, the U.S. financial system. Which financial system? Expatriate your capital. Become an international investor. You own the ETF, yeah, clearly you're invested in a U.S. asset. You own Bitcoin on cold storage or hardware wallet. You don't own a U.S. asset. You own an international asset and you are an international investor. So that's the most important thing, the broadest thought that came to mind. And it's not really the master chain. That's really like an investor perspective of what the hell we're doing here. So, but the master chain, let's try and bridge over to what I was also thinking. So, capital moves with trust. Where do you feel most comfortable? And you can inspect that very easily, not really from a TVL perspective, but mostly from a dollar perspective. And that's stable coins, these dollar liabilities we see in crypto space, in this crypto emerging market. And in that regard, it's irrefutable. It's Ethereum mainnet. It's just quantitative. That's where the most trust for capital is. And capital moves downstream. And it's the same thing with regard to capital flowing into U.S. assets versus capital flowing into emerging markets. And we've seen some of the largest inflows into emerging markets ever over the last period of time, month, 2 months. I've seen some posting on social media pertaining to that topic. So capital moves downstream depending on risk, depending on comfort, and it's cyclical. It's always cyclical, and that's exactly what's going to start to play out in crypto markets. The capital aggregates, accumulates where it's trusted, it's Ethereum mainnet, and it will move downstream as the exuberance ensues, as the opportunity and the flows beget flows beget flows. And once it starts, it's cyclical. So you will see the amount of liquidity on Arbitrum explode. The liquidity will explode on Optimism, and certainly explode across the Cosmos hubs, because that is a micro, small emerging market. It's one of the smallest places where liquidity has found itself over the last months. It's really only the last months that activity, financial activity on the Cosmos hubs has picked up at all. And I don't care about TVL. I care about the amount of dollars that are available that are flowing from markets to markets. That's the inspection to make your relative analysis of a strength of a market. So that's coming. That's still to be expected. And it's a process. It takes time. Days, months, a year, 2 years. And then you have to fold in the flows and pressures from the rest of the whole economic structure. Now, what does that mean with regard to opportunity? It means a couple of things. It means the most opportunity is where the liquidity is, and that'll be on Ethereum mainnet. It's just a quantitative assessment. It's not subjective. Opportunity is risk adjusted. You'll get potentially, speculatively, greater returns the more risk you take. And you'll still want to follow the liquidity. So my inspection in that regard is Arbitrum and Solana, where the greatest risk-adjusted opportunity will be. Well, the greatest risk-adjusted opportunity will be on mainnet, but secondarily, further downstream, Arbitrum and Solana, and it'll be very interesting what plays out on Cosmos Hub. So that's next on my list. I want to circle back around to this, because this really tells us where we are in the market. Luke nails this so spot on. It's remarkable. Very interested in Barachain coming out. I'm interested in the Cosmos Hub EVM networks. Dimension, obviously, because that's Ethereum network addresses. So that makes a big difference with regard to seamless interaction. It feels comfortable. When you start talking about other formatting of addresses requiring different wallets, and increases the complexity, which decreases the potential users, quantity of users that will be interacting with these financial products. I mean, as it is, just the concept of cross-chain still using your same Ethereum address is intimidating, and it will have its frictions. But the second you start talking about Kepler or whatever the hell wallet you want to talk about, Solflare, these are increased frictions. This is why the vast majority of opportunity will just be on mainnet, because that's where you get the guy from Coinbase and Kraken and Gemini to transfer over capital, millions of dollars of capital, and they'll explore there. And they're like, I'm not figuring out these other wallets, and they don't go downstream. Capital aggregates risk adjusted. But as that capital accumulates on mainnet, it bleeds over to the other networks. They're not networks, they're emerging markets. So explores. And that's very interesting. So this is going to be cool, because EVM reduces a friction. Now bear in mind, what is a chain? What is a gas token? What does that mean from an opportunity perspective? It's the protocols. Those are the businesses. That's why earlier streams in the year I was talking about chain explosion and people are investing in gas tokens. What is the use case for a gas token? It pays for a financial transaction. So if anything, at best case, it fits the criteria of a cash component of a portfolio. That's it. That's not exciting. It's not a business. It's the businesses that excite me, which are the protocols. And we know at this point how I define a protocol, how I define these businesses. You have credit, foreign exchange, and derivatives thereof. That's it. And it's the same business over and over again, no matter what chain you're talking about. So at least you're able to categorize all this insanity on one network versus another. And the odds are you're probably talking about like a DEX token, foreign exchange. You're probably talking about like an Aave fork, or some sort of business in the same vein. Solend. It's literally credit. That's why, Curve Federation has the Curve AMM, foreign exchange, has LlamaLend. It's going to be a credit facility or just CRVUSD, which is ultimately credit, but it's really, uh, uh, you know, it's really a Eurodollar market, and these are important observations. You're able to categorize, and then you can compare the different categories of assets, and you compose the overall structure of a portfolio. So Barachain's cool. This is GALXE.com. Gives people capacity to earn points. And these points obviously encourage interaction with the network. It's an incentive system. And it gets their test nets to receive interaction so they can finalize and validate expected functionality. And this contributes to airdrops and stuff like that. So this is an interesting page, GALXE, and you could probably this probably I'm just looking at Barachain right now, but all it is just very simple interactions, and it can make a difference with regard to airdrops, and that's a hot topic, airdrop farming. So something to do that takes a couple of seconds out of your time to claim some points. I look forward to I mean, basically any chain that comes online has a purpose. I mean, Fractal is going to be an easy one to interact with. I mean, most people are already engaging with it to a degree vis-a-vis VEFXS or CVX FXS, and they're going to have something to gain because of their early interaction with a core component of the network. FRX ETH is going to be the gas token on Fractal. That's going to be very interesting. I mean, literally, talk about new calculations required to assess incentives when not only are you going to be getting rewarded for just interacting with the network, but the yield in the network is inherent in the gas token. So just existing on the network is receiving a return, but that return is going to be folded into every interaction as well as every derivative product, every credit facility in that emerging market is going to have additional yield that's compounded because the very cash inherently has a return. And I believe it's not rebasing, but it's claiming. So it's kind of like I don't even think you could define it in dollar terms. You would need an account. You would need to talk about bank dollars, and it's not. You can't really make an analogy to anything in meat space. And that's fortunate, yet unfortunate. It's fortunate because all this shit is very interesting because in many regards they can't do this stuff in meat space. It's pretty spectacular the amount of innovation that has been achieved compared to what central banks have done over the last hundreds and frankly all of history. Um, I wanted to talk about Luke Gromen's post from a macroeconomic standpoint. So we've had a nice run up in Bitcoin and Ethereum, and I remind folks it's imperative to process. You could always have significant reversals, and it's important for me to clarify that that doesn't deter the destination, and that's exactly what Luke's talking about. It's what so many folks are talking about, and how bad the system is, what kind of horrible structure the system is in, and how screwed the real economy is. And that means general public and work and salaries, and that means it all leads to civil unrest at some point because the only way to support the system continuing is for the financial economy to continue and carry the burden of the reduction in real economic productivity. And as the financial economy booms, so does our amount of capital. Our capital inflates. The wealth we have is tied to the financial economy, not the real economy, which is why so many stocks on the stock markets are shit, because they're all tied to the real economy. That's why the tech stocks, they're not really tied to the real economy. They're tied very future centric to the AI and tech narratives, which are very much future looking. All right, so Luke's post is really cool. So you're selling your Bitcoin, gold, and stocks on a hotter than expected inflation print. He's referring to CPI coming in marginally hotter this month. But what he understands about the market is when you have a debt to GDP of 120%, the interest on the debt is increasing currency in the system more than the amount of currency that they're draining from the system. And M2 is just a component of it. You also have to consider total liabilities outstanding and how the interest on the debt ends up getting leveraged and cycled through various derivative positions, inflating overall currency composition. So his primary argument is that if you raise interest rates from here, the increased interest expense is going to increase liquidity in the system. And guess what? If you decrease rates from here, now the collateral, the actual money, the bonds of the system are going to be used to increase the liquidity in the system. So basically, his argument is the destination is an increase in liquidity in the system. That's what Mike Howell argues as well, obviously. And they talk different languages, but they talk basically the same thing. That's what all of them talk. That's what Raoul talks about, and that's even what Brent talks about, the way he understands the dollar. And the destinations are going to vary, and some of them could be quite awkward. You never know the destination, but they're more or less all very similar what all of them say. And they're all very smart in what they say. And what I like to do is digest what they all say, and I basically see the same exact thing, and it's quite fascinating. So all sorts of distortions result considering the debt to GDP of 120%. So if they raise rates, they're screwed. If they lower rates, they're screwed. And it all leads to the same destination of increased liquidity and our financial assets appreciating in price significantly. And that obviously leads to the social unrest as the wealthy get wealthier and someone working for minimum wage doesn't get anywhere at all. Um, so we can have significant corrections, and that's exactly why historically what we've seen big 30% corrections for Bitcoin. I mean, this cycle, look at this giant candle. If you go in further on the weekly, and you've seen charts circulate in social media where it's 5, 6, 7, 8, 30% corrections in a cycle. This cycle is likely going to be very different because of the passive flows. The ETF flows to Bitcoin, and Bitcoin will bolster and support the rest of the market. So I expect this cycle to actually be very different for very legitimate quantitative reasons. So the flows are very interesting. It's not just investors in the ETFs. It's how Fidelity says, all right, our mutual funds or whatever the hell they're structured products are going to have a 1% allocation of the Bitcoin. Now all of a sudden you got passive flows coming in. So I expect the passive flows to truly distort this market, much as it has distorted equity ETFs throughout history, especially now more than ever with 401ks and how they just pump money into the system. So we're going to start to see that, and that means we'll probably see more buoyant pullbacks, not 30%, 25%, 20%, 15%, You're going to see pullbacks, but they could be significantly muted. 52,000 on Bitcoin, 27.8. Remarkable. 1-2% pullbacks and then 5-10% to the upside. As I keep saying, it's going to get awkward. It's going to get really weird. And the wealthy are just going to boom. It's going to explode and go multiples. And unfortunately, the majority will be left behind. And that's sad and disappointing and morally questionable. And the moral hazard is through the roof. It's been taken out back and shot. And you could argue about it all you want from a righteousness perspective or what's good for society, and almost every argument will lead to the conclusion that it's horrible, and that's why I keep saying that the real economy is horrible. It's devastating. It's embarrassing that this is the state of things. But on the other hand, this is the state of things, and when you understand the state of things, you own shit that's going to do well for yourself and your family. 24 people in the stream, 6 likes. Smack that thumbs up button. I appreciate all of you. DeFi Advisor in the house. How are you? Literally on time. Shabbat Shalom, everyone. Friday. It's a good day on a Friday. Gazika, hey Cap. Hilda's in the house. Much a pleasure. CryptoTube, do less season is exciting. I did an activity yesterday. I locked my concentrator position, CTR, full round trip on the price point, but nothing has been invalidated whatsoever with regard to the original inspection that convinced me to make the allocation, which is something that I've been focusing on for years to push through the noise. And unless your original thesis is invalidated, it doesn't make sense to exit a position. And I ain't no trader. I'm an owner. I own businesses. Unlike anything that has been defined in past cycles, nobody talked about it engaging with these markets like I do. And that's the whole point. Redefine or at least make a definition. Write it down if you have to. It's not just rules, because that's something folks have talked about for years. Like, what's your trading rules? Write down the terminologies, the labels. I define what I do as a business. This company that I own provides credit, it provides foreign exchange services, and I get a portion of the revenue of that company. You use those terminologies, it sounds very different than I bought some frickin' tokens and they're giving me 13% yield and I'm auto compounding that. I like those terminologies too, but those terminologies don't digest well from a professional standpoint, from a reporting standpoint, and from a conversational standpoint with other persons in Gen Pop that understand business. Talking to a real estate person, they won't understand those terminologies. But if you talk about equity, and if you talk about collateral, if you talk about leverage, and if you're talking about ROI, rate of return, ROR, these are terminologies that any business person would understand in any traditional business environment. And now all of a sudden, you engaging with these markets the way you do is the same thing. It always was the same thing. And that's what's so interesting. It's just business. Every investment on the planet reduces to ROI. How long does an investment take to produce a return on basis? You put in $100,000 and you're making $20,000 a year, your ROI is 5 years. Everything, real estate has an ROI. If you get 5% of the money on rent income, you have a 20-year ROI. That seems like a little bit of an opportunity cost as compared to something with a 5-year ROI. And clearly, speculatively trading, and you produce 1,000% returns, you had a little over 1 month ROI on a 10x. If you got 12x returns, 1,200%, you'd have a 1 month ROI, and that seems quite extreme. and not reasonable to be a risk adjusted expectation. So, risk adjusted, 2 years, 4 years. Now, this is perfect for someone in their 20s. 4 years' time puts you at 24. 8 years' time puts you at 28. And then if you have a conversation with a 40-year-old, you're like, all right, over the last 8 years, I produced 1,000% returns on my overall portfolio. And they would be like, holy crap, what did you do? Because that's not numbers, that's not multiples that occur in meat space. We take it for granted, the potential that we're exposed to. So many folks just they they're not aware of the bullshit opportunity that's available in meat space. There's just nothing left in the real economy. There's nothing that's interesting, exciting, and there's just no opportunity whatsoever. It's just the way it is. One curious view in the house, athletic concept. Talk about Bunny and Aura explain how these rewards are given and the purpose of these two protocols. Bunny and Aura actually are very comparable in their function. They do the exact same thing. They're recyclers and incentive systems. Um, Bunny doesn't recycle, Aura recycles balancer, but they're an incentive regime and they're liquidity financiers. So people rent a person's capacity to direct liquidity, which the only thing that's akin to is political uh, lobbying. It's literally political lobbying. That's the comparison from a business standpoint. And lobbying is an entire business. It's enterprise. It's an industry. So that's exactly what vote rentals are. It's lobbying. Period. Um, that's the enterprise. So you're that. So incentive regimes are interesting because that's like a novel enterprise, something that's not talked about because lobbying isn't really talked about in traditional finance as a business. But that's what these are. So I guess you have credit, you have foreign exchange, derivatives thereof, and the concept of liquidity financing, which is something that's relatively novel in these emerging markets. Hope that helps. Hilda, DeFi advisor in the house. Do more ice baths. Yeah, I like the hot stuff. I like a good sauna. One day. What are your thoughts on Prisma doing another stablecoin? It was appropriate for them to separate from a risk perspective, talking about LSDs versus other types of volatile collateral, and you give people a choice of what kind of risk exposure they want. And that is an interesting choice, and I think it was a good decision. Dan, much a pleasure. CryptoTube, one per day is plenty. Yes. What is the revenue like for concentrator? 17, 18%? Variable. It will fluctuate, but over the last months, I've seen it at double digits. None of the other protocols of Aladdin are double digits, so this is the highest rate of return for an Aladdin protocol. Um, that is an empirical observation. It just is what it is. So the Aladdin ecosystem is so much bigger than what most people talk about. I mean, it's a very small minority of folks, even in the crypto space, that understand the full scale and scope. This auto compounder, as concentrator and cleaver, owns so much voting power at Convex and F of N is coming out with their stablecoin, and they have obviously the LSD of Ethereum. It's big tech, and the market caps on these are microscopic. So my perspective is, and why I locked it, is it's just mispriced. All of it's mispriced. The whole thing is mispriced. Even the FXN, it's just mispriced. And I was at the price point and market cap that concentrators at. I was able to attain a position size that's reasonable. If you could own 0.1% of a protocol versus 1, 2, 3, 4, 5% of a protocol, that's a massive difference. So if you're exposed to any one of the components of the Aladdin ecosystem and any one of them do well, they all will do well because that's how people's brains work. It's just exuberance. The exuberance and greed bleeds over. Oh, this protocol, F of N is up 1,000% on the money. It's at 40 mil market cap. What else is Aladdin doing? Oh, other tokens. Ooh, they buy tokens, shiny tokens. Oh, look how cheap it is. Oh, it's going to go up. And then, oh, lo and behold, it does go up. And that draws in more capital. All of a sudden, every other component of the Aladdin ecosystem does well. So, in that regard, I see this position as complete exposure to F of N, complete exposure to Cleaver, new stablecoins coming online that could produce a lot of hotness, a lot of sexiness for the protocol. And this was the cheapest way to acquire exposure to the Aladdin ecosystem. And now I'm more comfortable than ever because it was a purchase, not a position, and it's locked. Check back in 4 years. I'm sure it'll do very well. Hilda, sauna is great too. Yeah, I really need a sauna. I've been upper respiratory the entire week. Um, Reg, no worries about convergence impact on concentrator and attacking curve. Doesn't convergence attract staked out curve, SDCRV? Seems a yield lock CVG position is superior to lock CTR. I have all the exposure I need to the curve ecosystem. Uh, every protocol that comes online downstream of the curve ecosystem facilitates recycling and sterilization of excess staked out supply. Staked out does well, curve does well. Convex does well. It's all supporting each other, and it produces this remarkable synergistic effect that encourages and supports sustainability and survivability. And that's exactly what happened. Saw a curve drop to 40 cents, whatever the hell it was, bottom 41, 42, 43 cents. It was probably 40 cents. That was the OTC price. But the point is, it survived, and there's 2 billion and change, or around 2 billion plus or minus in liquidity on curve. Survived. And what I've talked about, that's the most important characteristic heading into whatever cycle, the next cycle, as folks would call it, is what survives. Because whatever survives, it's the same thing I'm talking about with the concentrator position. If Aladdin ecosystem does well, if FFN does well, this will do well because the capital, the exuberance bleeds over. So any protocol that survives, the capital will flow because it bleeds over from any capital inflow. And it will have a greater degree of lendiness, better trust. More capital attraction, more flows. Flows beget flows. Prices go vertical, retrace, and the whole cycle ensues. So, with regard to a CVG position, superior, what? If it produces 25% of the money, 7% is superior in crypto markets. Everything, no matter what position it is, reduces to an APR, a rate of return, an ROI. That might say 18% APR. That's basically a 5-year ROI. In 5 years' time, if there's 20% APR, you're getting a 5-year. You're getting paid back on your money. So in that regard, superior, it's basically the same thing. It is the same thing. It's all the same thing when you reduce it to the period of ROI. Hope that helps. Crypto 2, very strong. Yes. Does someone know about the points for fractional airdrop if they be counted by the current VEFXS points or by initial locked FXS? So fractal simply is VEFXS and CVXFXS that will benefit from being early participants to what they're building out now as a network. I think that's the simplest way to inspect it. So if you've had a VEFXS position, I'm very much looking forward to what they're building, and I think it will certainly be innovative amongst all the chains that thus far have been brought forth in this chain explosion. I mean, incentivizing interaction with the chain. It's pretty damn interesting what Fractal is cooking up. Very interesting. Isn't VEALD the token that collects the fees from the Aladdin projects? To my understanding, not currently, but isn't that part of the revision in tokenomics that folks have been talking about? So, yes, but that's revenue, and could I attain an appropriate position size? Of all the market caps, of all the circulating supply that was available in liquidity, this was where I was able to acquire the largest position size. And broadly, that's my perspective on the position. Anything in the Aladdin ecosystem does well, and I had the largest position size here. Smallest market cap. It's less than $1 million market cap at its current price point. Considering what FFN is cooking up, that's remarkably mispriced, and that's just understandable for the market. Um, Noah, do you have exposure to Astar? Yes, I have an old. I have exposure to Astar, and it's been staking ever since the plasma lock drop. Oh, it reminds me of like owning Celestia early. I mean, Celestia folks are up 10x on the money from seed round. I know probably even more because that was like 2021 that Celestia did its capital raise. So when they're up multiples, 100x on the money. So I do have exposure to Astar. Big deal. They have had a lot of deals lately, and what I really need to see is their Astar mainnet to Astar EVM, and they got their ZK EVM coming. It's really interesting because that all of that is Polkadot, and you're talking about an EVM on Polkadot, and all of this sounds exactly like what Cosmos Hubs has been doing. All of a sudden, you're going to have a network of networks over in Polkadot that are EVM. What the hell is Layer Zero doing? Seamless cross-chain liquidity. You're not going to know what chain you're operating on. It's going to be on Cosmos. It's going to be on Polkadot. It's going to be on Ethereum L2. It's going to be one of 1,000 chains. You're just not going to know. And that's the future. Um, DeFi Advisor. Sir, can I ask about your thoughts of Tokenbryce calling Prisma a liquidity fork and him in general seeing Curve as a mafia? Yes and yes. I mean, that's exactly what's going on. Uh, Liquidity Fork introduces complexities, and I could appreciate his perspective if even any of the code was originally from Liquidity. But clearly, Prisma has taken a variety of different directions, variety of modifications, and that's a never-ending conversation over attribution, licensing, recognition, terminologies like that, and plenty of emotional sentiment, vested interest thrown into those types of conversations. And, you know, it's hard to digest those types of arguments and conversations because there's a lot of humanity in there. And humanity has complicated the process. And that's where the software contracts are so appealing to me. There's no humanity in software contracts. There's nothing subjective to interpret. It's just input and output. So, yeah. And Curve Mafia, yeah. Look what they control. They control liquidity depth, liquidity financing. Yeah, but that's the protocol because you do have a distribution of tokens. You know, Michael doesn't own, he owns a huge amount of Curve, but he only owns a nominal position in VECRV. And the vast majority of Curve is owned by Convex. And then Stake DAO is 10% of supply locked. So it's pretty interesting. So yeah, and that's ultimately what I identified early on, that the federation, the strongest federation, people want to join it. I mean, what do you think the United States is? And it's getting more complicated as time goes on, and at some point it gets toxic and gross, and that's where we are from a nation state perspective. But that's the same exact thing. Same thing. The U.S. was getting stronger in the 1950s after the war, and everyone wanted to join, and they wanted dollars, and they issued dollar debt, and they wanted dollar bonds from the U.S., and it's the same exact thing. And once you start comparing crypto protocols to nation states and you're talking about networks in terms of emerging markets, you start to see they're very similar as much as they are different. Reg, the Aladdin eco is large, but it's hard not to see how much better Redacted has moved their pieces across the board. Yeah, touching those protocols, he's the boy plays chess. He owns a good part of what's significant in the crypto space. Yeah, but just remember, what's the key word in your entire sentence? Better. Better doesn't happen in software. Better is subjective. It's a human word. How do you objectively interpret what you're saying? Two protocols. That's it. Two systems. Two networks of networks, or two organizational structures with sub businesses. Two conglomerates. And then you can inspect it quantitatively, which has more active capital deployed, more liquidity, more stable coins, so on and so forth. You can do a quantitative assessment. But better is a subjective word. And the most important thing you could do engaging in these crypto markets and being an investor is get away from the subjective words and be quantitative. Your train of thought with regard to better is very easy to lead to over or excessive diversification. You have a position, it's up 10x, it's lovely, it's exciting, something better comes along and you want exposure to it. Why? Because it's better. Might actually be better technologically, but generally the sentiment, the feeling is that it's better. So you want exposure to it. Might not be the best thing to do to have exposure to it because it's better. Better technology isn't necessarily a better investment. Status quo often remains unimpeded. The best technology is not always the best investment. And that is a very meaningful thing to remember. It plays out time and time again in markets and the business landscape. Food for thought. The mistake they made was not giving out new tokens for each of their products. Maybe. It's a reasonable argument. I like both businesses. I think both businesses are very interesting. And you know what's most interesting? In the coming years, when 1,000 new businesses like these are made, 10,000 new businesses like Redacted Cartel, didn't who said cartel earlier? It was DeFi Advisor talking about Curve. I mean, literally, Redacted calls himself a cartel. I love this space. It's so interesting. So when 1,000 new protocols, 10,000 new protocols come online by 2030, all that matters is that they exist now. Redacted or Aladdin or Curve Federation, because those are the protocols that'll be trusted. Those are the protocols that are going to have the liquidity and the participants and the market actors talking about them, bolstering how trustworthy they are, proving how trustworthy they are because they've had 2 billion, 20 billion, 200 billion for Curve in the future in 2030. Why not? And that's where the activity and that's where the opportunity will be, where the trust is. Man, seeing you bullish on Aladdin Dow products is one of the better signs for our Dow, to be honest. Of course. I mean, look at the tech. Very interesting what comes with the stablecoin. Because stablecoins garner a lot of attention because you'll see the percent sign. You'll see the percent sign, and people are, oh, a percent. Oh, it gets people's emotions going. Oh, it's exciting. Meanwhile, it's a percent sign. And every protocol has a percent sign. Therefore, every protocol is the same. I'm just saying, the general public or the average market actor is so receptive to usually what matters least. So I think the stablecoin will likely to garner a lot of attention, and that's all that matters. And it'll garner attention for the wrong reasons, because there's other products that are stablecoins as well. So it's hard to be an investor because you do have to consider sentiment in regards, and then that's a sometimes a good way to see what's mispriced. Because if something is absent sentiment, that could very much mean it's mispriced. Because when sentiment hits and then runs multiples, that's just what crypto products do. Thoughts on MIM? Yeah, Abracadabra just launched their new tech. I like Abracadabra. I always did. I was an early investor with them, and lots of hiccups over the years at this point. Man, they geo block their website hard. That is so annoying. I'll leave it at that. I don't have any exposure to Abracadabra currently. I have a high opinion of what they've done over the years, and I think they'll have an interesting future. Simple as that. People want to join the strongest federation. Has this changed your idea then about keeping our exposure? I mean, interestingly, it really should. Um, talking last night on Discord, I was reminded very nicely about things I was saying that I shouldn't be saying because I know better. And what you're saying right now is one of those statements. How is what you're saying not the case? And competition, you don't always want to own the competitor with regard to liquidity financing. That's all it is. It's an AMM with liquidity financing. That's it. It's identical. And frankly, since the beginning, since Aura and Balance are getting interesting, it's exactly what Tetradote said. That's exactly what he said. It's an interesting thought, Dan. And yeah, that's probably the most weakly held position right now. And your statement makes me reconsider how weakly held it is. Food for thought over the coming weeks and maybe months, especially as unlock periods come. Any thoughts on synonym? Never heard of it. Converts T to invest with interesting with the wormhole narrative. I have no idea what it is. So many damn protocols. Oh, you know what's an interesting one? Was it Beatrix or something? Is that Bitcoin botanics? See if I can find it real quick. That's interesting. Yeah, botanics. This is interesting. I mean, come on, a fully decentralized EVM equivalent L2 on Bitcoin. At least that's the way they're marketing it. Interesting. I believe this is what I'm thinking of. Isn't this the Cosmos chain? Or maybe it's not. Spider chain. Bitcoin L2s are remarkably interesting for the same reason Ethereum L2s are interesting, and for the same reason Cosmos hubs are interesting, and for the same reason Polkadot parachains are interesting. It's the same exact tech, just with a different security consideration, and it could potentially attract different market actors. EVM, everything you're invested in from a protocol standpoint can be deployed on this network. Why invest in a particular network, a particular gas token, when you can own a business that's deployed on all networks, that's seamlessly cross-chain? That's literally what everyone talks about with regard to Chainlink. That's literally what everyone talks about with regard to Layer 0, seamless cross-chain. So why isolate yourself and restrict your potential for success with your portfolio to one chain when you can own businesses that exist on all chains? Food for thought. Fits with your cross-chain credit layer thesis? Yeah, it probably does. It does. I don't know anything about it. And I'm sure it's pretty much the same thing as every other credit protocol that exists because they're all the same. Deposit collateral, over collateralize, borrow some capital. It's all the same. It's all the same thing over and over again. Um, Order Dow, Sammy, and those boys. Okay, so yes, I'm familiar with that name. A lot of folks like the pivot, and that's cool. Great tech isn't always a great investment. Just a very core thing to always keep in mind. Always pick my brain, Reg. Always a pleasure. One curious view is FXS mispriced in your view, or is L2 roll up discounted? Let's take a look at some charts and we'll wrap up the stream. Let's look at the dollar real quick. Let's give you some perspective whether you can see some discounts. Man, there's big crossroads. Japan's up against the wall. They could sure use to significantly devalue the currency more, along with China, and that's probably where they're heading, as per other macroeconomists. And that could rally. I mean, Brent talks about literally the dollar rallying alongside the U.S. equities markets and crypto as well. That would be weird. Traditionally, there's an inverse correlation between the dollar and equity valuations, particularly with regard to energy capital requirements. Dollar goes up, it, dollar denominated energy gets more expensive, and that forces people to sell their assets. But that would be a really real weird world, and he sees that as the end game. Dollar up, everything up, and the rest of the world's currency is collapsing. I don't think we're at dollar end game yet. I think we're still in dollar collusion mode, and I think we have at least one cycle left. Cycle with regard to cross-border capital flows, cross-currency, pairs, like the yen rallies to 100. Big numbers. That would be a cycle and years. Like yen rallies to 100 over the next 4 years, something like that. Or DXY crashes to 90, then 80, then 70 over the next 5, 10 years. And these are games of geopolitical collusion, but you can have things break. And when they break, they get weird. So my expectation is I have a complete acceptance that we could have some sort of systemic event between now and Q3, Q4 2024. Okay. That means nothing with regard to the way I engage with markets. You all sat here with me in 22 and 23. You think I'm going to do something different in 24? I look forward to the destination, which we get to traveling various paths. But the destination is all the same because of the things we understand about what the U.S. What Treasury has to do with regard to debt refinancing for fiscal 24. Let's end on Frax chart 890. I mean, zoom out, and it takes months to play out. You get a retrace down to 770. It's literally a breakout and then a retest, and then you print the higher high heading into April, May, June. $12. That's literally trifecta of bullish confluence. The problem folks have is looking at the 4-hour candles or the 1-hour candles. Drive you nuts. So you got plenty of moving average support below, which means structurally you got higher high, higher high, higher low, and now you have finally getting back above time weighted average price on the monthly for the first time in over a year and a half. This is structurally interesting. Whether you can get a discount, $7 versus 8, 10, 15, 20% discount compared to current market prices is interesting. But most of us already are in position, and you just let it sit. You let it ride. Watch, it bounces off 770 in March, and then in April, May, June, you're at $12, and there you go. Breakout, retest, higher high. We've been showing this type of stuff since 2020 and 2021. This is old school talking points when we did trading. That's the simplest structure there is to say, yeah, this is strong, and this is a reversal because you're coming off a higher low, and that means you're not going to get a lower low. The amount of people that own at these prices, everyone would have to sell, and then people that didn't sell down here at 450 would have to sell to get the lower low. It just doesn't make sense at all for that to occur. There's a reason they didn't sell at 450. So you think they're gonna resell here at 6, 7, $8? Doesn't make any sense. Anywho, I look forward to Fractal. That's coming soon. There's a lot of things to look forward to in these markets. The drama of the path is something not to look forward to, but I find it interesting. It's a path on a journey to a destination, and the destination is exciting to look forward to, which means everything up into the destination, you need to convert the way you look at these things into something that's exciting, because that's the only way to sustainably engage with these markets, to survive these markets. They need to become interesting and exciting, and they certainly are. And we'll keep telling the story. 17 people made it to the end of the stream. 8 likes. Smack that thumbs up button. I appreciate each and every one of you. Friday, February 16th, 12:40 p.m. Tell everyone to subscribe. I wish you all a wonderful weekend. In the description, a link to the most rational community in the entire crypto space. I appreciate everyone in there, and I will see you guys next week. Peace.